Well, thanks so much for tuning into Talking Point. I'm your host, Neeraj Chan. The Talking Point today are the views of Mr. Samir Arora and how does he see investing in the current landscape. Samir, great having you. Thank you for joining in. Hope all is safe.
All good, thank you. That's why I'm in office after a long time, yes.
Okay, which is great to know. Samir, slightly volatile as the year was anticipated to be, but it's a cocktail of a lot of potent events as we see currently. How do you view the situation from your prism?
Well, if you look at it, with all this drama about US tightening, Ukraine issues, and valuations of these new age companies, everything, after that, if you see how much has the market fallen this year in 1.5 months or whatever, it's actually down less than 5-6%. So in a normal situation, if I got up one morning and you say, can the market fall 5% without any reason, I would have said easily. And this is with so many reasons. So therefore, it's not that bad if it needed so many reasons to fall 5-6%. So I think that we are engaging with the world in terms of discounting some of this information. So let's talk about war with India. That one is tough. And anyway, we'll know in 4-5 days or even today. So let's get that out of who knows. Now talk about the US interest rate hikes, which are obviously going to be a series of them, and Goldman Sachs says 7 of them, and somebody may say 5-6 of them. But we have to believe, if not today, after 5 days, 10 days, 15 days, that would be discounted in the US, because the US market is quite big. And if we sitting here can analyze their market, they can also analyze it as well. So plus minus 10, 20 days, that would also be discounted. But it is possible that throughout, even though discounting, the market remains under pressure and does not go up or falls another 5%. It's already fallen 10% there, 9-10%. So in that sense, the question is whether the Indian market can give good positive returns while the US market, let's say, continues to be down 10-15% year to date. Now that's a bit difficult. So we don't say good returns. We say moderate returns are still possible in the range of 10, 12, 15%. Because generally India was otherwise doing well. India's recovery was starting. All this COVID thing seems to be finally over. Omicron has been finally, let's say, out of the way. So things were on track. Now, because of US inflation, US rates, are we to follow them completely? Or can we outperform a little? I think we can outperform this much. And even they, in the end, will stop falling plus minus 5%.
Okay. Well, Samir, the skeptic would say that the template for 2022 might be different because liquidity might not be sloshing around as much. And could that be something that will keep the markets volatile with a negative bias?
Yes. So the US market is having a negative bias. The question is whether India should have a negative bias or not. So first thing is that if you say liquidity is sloshing around, then why last year FIIs put a handsome $3.8 billion in India? Our normal used to be 20 billion a year when there was no liquidity sloshing around. If you look at Korea and Taiwan, they would have combined had 50 billion of redemption, 40-50 billion. And this year, of course, we also have already had 5-6 billion of redemption or 4 billion or whatever. And maybe from October, this has happened. But for the whole year, it was 3.8 billion inflow. So I think there will be some part of the FII flow which came in because of liquidity and easy liquidity. And maybe it's that money which is coming out. But I don't believe that 5, 10, 20 billion, which is what we got in the previous years also. Like in 20, we got, I think, 20 billion. But in 19, we got some 6, 8 billion. Is so much to do with liquidity. That was a general longer-term allocation that we had always got. Secondly, if you look at where the money has come into India, maybe 50-60 billion has come into private equity and these VC funds and VC investments. So that money has a very long tenure, minimum 4, 5, 7 years at least. So that money could not have come due to shorter term or even 2-year liquidity. So when we haven't received money from when the times were good in the part where it could have come, we have got it in the part which is a more complicated part of which is the private equity. Therefore, I don't think that is the main reason for in or out for us. The reason is that if the US market goes down, then all the valuations are reset. Because I will say Google is available at 22 times and that company is available at 24 times. Why are you trading at 40 times? So the bigger problem this year will be a reset, not of earnings, but how much are you supposed to pay for those earnings?
Sure.
Because that part is a bit loose in life. You're growing at 20%, now are you supposed to get 30p or 40p? Who the hell knows? Nobody knows. But broadly, you say historically it was in this range, and it's been in this range relative to itself and relative to the sector peers and relative to the market. So plus minus that we accept. But many stocks have gone way out of line with their historical averages. Mostly in our case, consumer staple guys. उसमें हो सकता है कि either they correct or they don't go up. Their earnings will be still as what you thought, say 2 months ago. But वो change हो जाएगा. You will not know exactly how to say whether Zomato should be 90 or 60. Who knows? Everything can be justified. So those things will maybe adjust, but you will not. That's why it's a tough year. Because it won't be easy. Earnings are falling, so I'm selling the stock.
That's true. That's true. No. So, Samir, are you kind of positioning yourself for what you believe would be the range of valuation for the areas where you are invested in?
So, what we've done is, in a broad sense, we don't believe that market this year is going up 20-25%.
Right.
Once you accept the market, by God, thankfully, I mean, we'll be thanking God if it goes up, say, 12-15%, 15%. Right. Therefore, a stock that you buy, you don't have to think of a stock here. If the stock is going up only 10-15%, I'm not interested. For example, today I'm very interested in ITC. If my return expectations from the market are moderated, I don't mind buying a moderate return kind of a thing. But if there can be higher confidence, at least this much it can do and it won't give me minus 20. But there are some of these other stocks which are, say, trading at 60-70p. They could easily be trading at 50p and people may still find them expensive, right? So therefore, so that's why you need a little bit of the market backdrop, in a view of a market backdrop, to say whether I am looking for only stocks going up at earnings growth at 30-40%, because otherwise I'll be left behind the market, which is itself going to go up so much and all that. So because of that, we have changed a few stocks. We have tried to buy. Also, we are trying to buy at least 1 or 2 opening economy stocks, because we think now there'll be a massive travel related and all that happening, which was happening up to December. And then in Jan, it stopped. But ye sab hoga with some vengeance, at least in the first round.
So, am I surmising it correctly if I say that you believe value could score over growth at slightly moderate?
Because we don't change things so much to suddenly say कि value growth हमारे क्या कि the financials play the role of value in the sense that most of these stocks have not got re-rated over the last 4-5 years.
Right.
They may have gone up in stock performance, but only in line or less than their earnings growth. Okay. So that so for example, when I already have State Bank, but can I say State Bank, although it is up some 60-80% last year, it is value. It is some 1.x time, or ICICI Bank is value relative to Kotak. But if you call that value, yeah, we have a lot of value. But if you say value means some ONGC, we are not buying those kind of things. We are not buying that kind of value. But if you say relatively, yes, little bit, it has happened on its own, and we, in that sense, already had. But what I was saying was, we are trying to buy, we don't want to buy more and more software, for example. It's one of our larger holdings, because it is connected to the US. Plus, it has also got re-rated. And although their earnings also did well, but now how much should that be? We also don't know. So we are not increasing the rate, and on the margin we have reduced to 3%.
Okay. Any thoughts on themes that either have done really well and could face some pressures, or like SpecChem, for example, or themes which haven't done well, had a bombed out 2021 autos, for example, and could there be a bit of a comeback if the chip shortage, etc., gets resolved? Any thoughts, any thesis there?
So on the ones which have done well, what was the example? Techem?
Specialty chemicals, yeah.
Specialty chemicals, we have only one stock, but I think specialty chemicals, I've been saying for a long time, cannot have these kind of valuations. It
Okay.
is not a consumer staple company. Whatever be the growth, you are not supposed to grow. You're not supposed to have valuations which are like 60, 80, 100 times, which many of them have, or 50, 60, so nearly all of them have. No, we don't like that. Although the underlying growth may be very high. And we don't like auto because we think broadly it has been disrupted. And just the fact that you have a chip shortage is giving you some excuse that there might be again a little bit of pent up in that, but we don't want to buy disrupted sectors because the sector in a longer term sense has been disrupted by EV. It is the same guy that we are going to buy. If you suppose we buy Suzuki, Maruti, he doesn't have an EV story for us. So you're buying it for the fact that first 3-4 months there'll be higher sales because it's supply problem. That is a difficult thing to play then and exit in time because that is not a sustainable story. So,
You reckon fintechs are disrupting banks or not?
fintechs are
Really?
going to go bankrupt, so there's absolutely nothing to worry. Fintechs are not going to be there after some time because all of them have shown complete lack of imagination. That if you ask them what is your end game, their end game is that we don't make money on payments, we don't make money on whatever they do, but one day we'll have so much data that we will give money to the shopkeeper where this QR code is being used. That is the end. So that means you are giving money to a guy who today cannot go to a bank, but you will have some data and you'll give him some money. We call that microfinance company. All of them which have gone under in our country are doing very badly. So if that is your end game, you also know that if you in the end turn out to be just a plain lender, we know what valuation to give you, which is on your book value, not the loan book value, your equity book value. You will get some 2, 3, 4 times, and if you're like Bajaj Finance, you'll get 8 times. So 4 years later, 3 years later, when you say that I am now giving loans on this databases, this, that, and I am now profitable, we will say now you can have 5, 6 times your or 4 times your current book value. By that time, their book value will be mostly zero. Because today they are making losses, next year loss, next year loss. In 1 year, they'll suddenly make some small profit, and therefore the business is set. But that year, their book value will be not. Or it would have been newly raised money book value. So we already know your end game is zero. So you might as well take zero from us today and move on in life. Because nobody is saying what else they are doing. You tell me what this fintech is doing other than saying today I will collect data and one day I will lend money. So NBFC you're going to become, no.
Yeah.
We have seen many attempts in our life. You can be a good NBFC, okay, take 7 times from us, go. That still is nothing. There's absolutely, because I think this idea that everybody's data is important. I go and buy chole bhature at Haldiram and pay by QR code. So what did you do with my data? Nothing. It's just a waste of. If a guy goes on Uber every day from house to office, office to home, what is the use of this data? Can somebody explain to me that this data I will use while on the way when he's passing Connaught Place, there's a sale going on? I mean, the guy is going to the office, he comes back, pays you, you got data. Now what to do with this data? Tell me what to do with this data. Data is what Google has. Data is what Amazon has. You're about to buy. You're choosing to buy something. Everybody's data has no value. This random collecting of data, we'll do this, we'll do that. Nobody has done. US, all the fintechs are down quite a bit. You look at this peer-to-peer lending has gone for a 6. What is this? Leave it.
Okay. It's the same argument for consumer tech as well, Samir. Just wondering.
For consumer
tech.
Like the name of company?
I mean, Anaika, Zomato.
Oh, Zomato. No. See, those companies are different. They are doing a good service. They have started a new industry also, you can say, sitting at home. So there for Zomato also, it is not. See, in fintech, there are only some 150 companies doing fintech. And they are all saying we do credit card and we do.
Agreed.
In Zomato area, there will be 2-3 guys doing it. And it is not easy for a new guy to do it because you cannot say, I'll do it from Delhi first. You have to do it at a national level. You have to tie up thousands of restaurants and so many of these bikers and all that. That's an actual business somebody has set up. There, the only issue is that you can't grow at these low rates for that kind of thing. But look at it. Google has a $55 billion revenue in a quarter in December 2020. Sorry, 2020. And in 21, on that 55 billion, he grew 32%. हमारे वाले बंदे बेचारे 200 करोड़ पे 200 million पे if they grow 30-40%, they think it's very good, which might be good.
Sure.
Valuation, or you should look, you're about to break even. But as a concept, that is a genuine new thing that somebody has done. I think the fintech, the first guy had done something good, or the second guy, but the UPI came and the payments in India became free. And then we have, at least according to me, 100. I don't know how. There must be 100 fintechs. So therefore, how can it be? That's the simple thing. If there were two, it may have been a different this thing.
Okay, interesting argument. The other, this whole fanfare, last couple of questions really, Samir, before we let you go. The other is this very interesting argument around how the promise of growth in insurance, for example. I'm bringing insurance up because we have the LIC IPO coming up. The promise of how insurance will grow gangbusters, somehow meandering along, not quite giving returns.
Actually, we have two of these stocks which don't go anywhere. One is HDFC Life, one is ICICI Lombard. So even I was thinking, man, these stocks have not done well for 2 years. So if you go back the previous 2-3 years, they had done very well. And some of them we had even that time. Or may not this weighting, but we have a little bit extra in one of them now. But the point is, so therefore we said, okay, maybe there were actual issues related to COVID, then related to auto sector, because Lombard is in that, and then related to the fact that you have to buy some 3-year insurance, previously you could buy 1-year insurance, and just 2-wheeler and all that. So there were many issues related to that. Actually, today, from a value, not a value in that sense, but if you say I want to buy underperformers or stocks which otherwise we know are good, actually we want to buy more of those. But yes, they have had their problems. But since they have done well in the previous 3, 4, 5 years, and there is some excuse that we can give, or they can give us, why the stocks have not done well. For the moment, we are accepting and even proposing those excuses. It'll be okay in some time. But otherwise, yes, last 2 years have been, we have had to subsidize these stocks with the performance of our other stocks.
Got it.
For sure.
Yeah, actually, the early argument, I forgot to bring this point, and you would have a better insight into this, but I was reading a tweet from somebody about how even last year or the last data release, Amazon's, the retail business still made losses. It was only...
Doesn't make money.
Correct. Yeah, so the argument that you made about fintechs in that sense, so to say, about the need for burning cash, it will last for really long.
Amazon is actually near monopoly, not monopoly, but real leader.
Yeah, precisely. And still
real leader also.
That's true. Yeah.
And then there's another sector, which is the Nykaa kind of sector.
Hanji.
Usme the issue is that everybody will want to do it. In the sense, see, Zomato, everybody cannot do because it's too complicated and you will need a certain minimum market share across India to be able to set up that business. But a Nykaa type, Amazon kehega, main bhi karunga, I will also stress on cosmetics, and Jio will say, and then Myntra will say, and then Shopper Stop will say, and then Purple will say, and then My Glam will say, because they feel that one can be done without worrying about what is our global, India-wide market share for cosmetic, online, they say no. In Zomato, that's why Zomato, I think as a business is good, but it's such a running on a treadmill kind of a business. You make 20 rupees and you have to be always perfect.
That's true.
So actually, in the Nykaa kind of issues that many people will want to do it. So all the time there will be, at least in the beginning few years, based on the success and the market cap of that, some 10, 20 more guys that want to do it now, or stress on it. They may have been already. So now whether our market can handle 20 guys will all be selling cosmetics or plus minus either same brand or their own brand, but which looks like that, is the lead of those guys so much. So all of them have some angle in terms of how they can do.
Okay. My final question, Samir, and that's on PSUs. Though you briefly told me that you are not quite inclined there, but the argument of relative valuations is very, very strong. Could there be merit in some?
So we thought we have State Bank, which is our big holding, like second largest. Now, do I need to buy another bank or should I just buy more of State Bank only?
Ah.
Then we said, we have too much of State Bank. So the first argument, why buy another bank? We can buy more State Bank. Then when we looked at State Bank, we said we have enough of State Bank anyway. So we didn't buy anything. So the point is, you could go down a little bit on that PSU bank curve and maybe buy another bank. But what about other PSUs? Which PSU will you buy other than a bank PSU? And in bank also one or two names. Maybe
Sure.
Arora or one of these. What else?
Defense, shipbuilding,
No, no,
etc.,
no.
etc.
We are okay with that. Those are okay. No, but defense also a little bit, you're right. Defense, you could buy part of electronic. We don't have it. But yeah, you could say that the government is clear about increasing domestic purchases or whatever. Our problem there is that we consider PSU share as effectively a non-voting share. And a non-voting share, according to, by looking at Tata Motor DVR, trades at 50% discount to the voting share. So if this is the non-voting share, the theoretical voting share is trading at twice the valuation. So this one is supposed to trade at half the valuation of the theoretical this thing share. So if you say it is cheap, I say no. It is supposed to trade at 50% or whatever level you think. So if it is trading more than 50% discount, then it is that is my theoretical thing. But broadly, I agree. A little bit defense could have been bought. We don't have it. Right now, we are not going to buy it.
The next PSU bull that I speak to, I'm going to present this argument, Samir. It's a lovely one. But thank you so much. This is lovely, fun, informative. Thank you so much and stay safe.
Best luck. Bye.
Thank you. And viewers, thanks for tuning in today.